Thanks, Peyton. I'm so excited to be here today. Thank you for joining us. If you're live, great. And if you're on the replay, because I know this will be recorded and played back available for replay. So today we want to talk about profit leaks, is what I call them. Okay. Because here's the deal. No matter what law firm I talk to, it's rare that it's one thing that if you just snap your fingers, click the easy button. If you just fix the one thing, that everything is going very well in your business. It doesn't. It rarely. I mean, I maybe once in like my 20 some years of working with law firms, that's happened. What normally happens is it's one little thing here added to another little thing here, added to another little thing here, and then the little things start to compound, and before you know it, it's a like fixing 10 little things actually is very meaningful. So today we want to talk about how do you find the things, and I call them profit leaks. And why I call them profit leaks, I try to tie this back to a dripping sink. So imagine your kitchen sink, your bathroom sink has a leak. And when you walk by the sink, it's dropped like one little drip, right? And you're like, oh, that's a little irritating, but it's fine. It's just one drop of water, right? And then you walk away, go about your day, whatever. You come back and then drip, and now it's drip, drip. And you're like, oh no, it's getting worse, right? And I would challenge you if you pull put the plug in and then you walk away for an hour, 2 hours, 3 hours. Now all those little drops are starting to accumulate. And now you're starting to see it actually is a big problem. Okay. That's the things that we're trying to do today is we're trying to say, when is that leak? Where is the leak? How do we fix it? How do we identify it? How do we stop it so that we have more money in the bank? Because that's what this ultimately is about. And I don't care why you want the money in the bank, because for some firms, that means it's more time that you can spend doing your hobbies, spend time with family. You don't have to work and grind to work more hours in a day. Okay. For other clients that I work with, it's I want to take a vacation every year. I want to take 2 vacations a year or a weekend away, or maybe it's a different house in a different town, or you want to put money in savings for kids' college or retirement. But somehow it all comes back to money is going to fund whatever you want. Okay. I don't know of anybody I talk to that's ever like, I just want to grow my bank balance. It's always, I want to grow it for a reason. Fund my retirement, fund my kids' college, fund vacations, hire more staff so I'm working less. Okay. Those are the things we're talking about today. So I do have slides, and I will say that Peyton, if she hasn't already, I haven't been keeping up with the chats, but they will be shared in the chat, so you'll be able to download the slides. And then one thing, just wanted to mention that you are able to log back into the 8am .com webinars website to access after to get your CLE certificate and access the slides. Or if I talk too fast, and I try not to, if you want to watch it again on replay, you'll be able to grab that again. But it's all when you log back into the 8am webinar website. So I'm going to go ahead and share my screen. And okay, just had to make sure that that was it went to the right screen. I have 3 screens, and sometimes it shares the wrong one. So looks good. So a little bit more about me. I am a CPA. I'm licensed in Ohio, but unlike your law license, I'm actually portable. I can work anywhere. I'm portable in the sense that I'm remote. I work with most of my clients remotely. I only have a handful of clients who are local to me. But my CPA license, although it's issued by Ohio, I am not prohibited from working with people located in other states. I am a law firm fractional CFO, which the difference being that my focus as a CFO, so CFO is just Chief Financial Officer. It's just the person in charge of the money. And that means how that compares to like a bookkeeper or a tax person is that your bookkeeper is recording your financial history of your firm. Your tax person is reporting to the government what your history was for the year so that you can compute how much tax you owe. Whereas as a CFO, I'm future looking. So if you're in a car, you've got the windshield and you've got a rear view mirror. Your tax person and your bookkeeper are looking in the rear view mirror to make sure that everything that happened got recorded. And I'm looking through the windshield because I want to know where you're going next. And I want to be able to warn you there's a roadblock ahead, there's a detour. Okay, so that's the difference with how I work with law firms. And so I have worked with law firms for almost 20 years now. It's been an amazing journey, and I love this industry. So let's talk about our objectives for today because I know we're here for CLE and because I have CPE requirements to maintain my license, so I get it. But we want to make sure that we identify the common sources of expense waste in law firms, apply a structured expense review process to your practice. And sometimes I have people that are like, ooh, structured, I don't know. But then others are like, oh, thank goodness, I have detailed instructions. So we're going to do our best to walk you through whichever side of that spectrum you're on, to walk you through a process to make sure that you're going to be able to review your expenses and understand why and how to fix things. We're going to evaluate expenses based on necessity and return on investment. So I have some firms that I work with that at initial glance, it might hit my radar that I might see an opportunity of wasteful spending. But if they can tell me, like just talk through why they're spending what they're spending, then we're good. I'm all about spending on the tools that are going to make you money. Okay. So if it's either going to increase your client base, if you're trying to grow your client base, or if it's some type of a tool that you need to be able to better service your clients, I'm all for spending the money. So I'm definitely not on the side of never spend. I want you to spend your money, but I just want you to spend it wisely. And then once we get all these parts going together, I'll show you how to do this every quarter to make sure that you're continuously improving your profitability. So just in order of the sections that we're talking about, so our introduction, understanding where profit is lost, my expense review framework, and I have something that you can download that'll help you with this. So you can take notes, but I will have something that will help you. It will summarize everything that we talk about today. High impact waste areas. So I will just give you an overview of the places that I see where it's common among law firms that there's could be potential issues, and then turning that savings into profit. And we'll have a Q&A at the end. So introduction and framing. I just want to set this up that why more profit doesn't always mean you had to have more clients or work more hours. If you ever looked at your profit and loss statement or your income statement, they're the same thing, but two different ways to refer to the same statement. It starts off with your revenue at the top, subtracts off all your expenses, and leaves you with a profit number, so net profit. And I call them levers. There's different levers that we can push and pull at different times in a firm to increase your profit. And the focus on increasing your net profit is because if you can increase your net profit, that puts more money in your bank account. And again, like I started, the more money you can have in your bank account gives you more freedom to make more decisions. Okay. So more profit isn't always more clients or more hours. So I talk to so many law firm owners that they're kind of the go-to answer seems to be, I'm struggling with X. Either I can't make payroll, I'm struggling to make the rent payment. I want to hire staff, but since I can't afford to, I am working more hours. I'm working 60-hour weeks. And I don't love that. I want you to work as many hours as you want. If you love working 60 hours a week, that's great. But that's not my love. So, but whatever that is, to fix it, you need more money, right? And it seems like the go-to answer is, by default, is if I need more money, I just need more clients. When that next client comes in the door, everything will be okay, right? I know I've said this, and it took me a long time. I own my firm. I've owned my firm now for 20 years, So I know what I used to go through in the beginning. If I can just pick up one more client, everything will be fine. And then that turns into not being the answer. Because here's what happens. You take on more clients, you end up having to work more hours, and now you have to hire people to help you. And so the profit doesn't change because while you have more income, you had to increase your expenses. And so the win is now sucked out of your sale and you're back to the same where you were before. That's why more clients is not the answer. So, what I wanted to focus on today is instead of trying to push to increase our revenue, let's see where we can identify wasteful spending. Okay. And sometimes it's decisions that you're not making bad decisions, you're making the right decision in the moment. But then when you go to the next decision, you're forgetting about a decision you made 10 decisions ago. Okay. So that's what we're trying to work on today. But I guess I want to kind of change how we think about things. So, profit is not just what's left over after your expenses are paid. There's a book called Profit First by Mike Michalowicz, and I like how he explains let's rethink how we think about money in our business. We have our sales, so income, revenue, whatever you want to call it, top line revenue, okay? So money coming into your firm. What if you took the money coming into your firm, subtracted off what you want your profit to be, so your net profit for the year, and whatever's left becomes your bucket for your expenses. So it's a shift. And if you're good at algebra or not good at algebra, I get it. Algebra was great for me, but beyond that, trig and all that was out of my world. But it's the same equation written in a different order, and that order makes a difference. So I want you to start thinking about profit is a decision. It's not just the result at the end of the year. So, what is a profit leak? Okay. Profit leak is any expense that does not give value to the firm. Okay. It's something that you're paying for, you're not benefiting from it. So, here's some examples. If you have an online scheduling system, I use Calendly, but what if I'm using Calendly and I have another attorney in my office and they're paying for Acuity? Why are we paying for two different things? Because most times, and this doesn't always happen, but most times, if you just pick one of those tools and add a second user, the second, the second user is not as expensive as two separate subscriptions. Again, that does not always work out, but I'm just trying to play out for you how this works. So those are the things that we're trying to look for. Now, leaks can be completely obvious. If I go and I pull um, uh, the list of all the detailed list of expenses for a client and I start looking and I see, another example would be who has Teams, Google Meet, and Zoom. I'm like, whoa, that's obvious to me that there's a possible issue. That why are we paying for three conferencing platforms when we could just have one? Now there are times where I do talk to firms and they're like, no, there's a reason. And as long as they know that they made a conscious decision, I'm good with it. So, but my job is just flag there could be an issue here. But here's the things that become invisible. Everybody in this world now, we've gone to a subscription world, right? The subscription that auto renews. Now, the ones that are every month, I feel are more visible to us. The ones that renew every year, I have on my calendar every whenever I sign up for something that renews once a year, I go and put in 11 months so that because sometimes you have to have a 30-day cancellation notice. So I'll put in my calendar and just say, hey, don't forget this subscription renews in 31 days. So, or 35 days or whatever it is, so that it trips my, it hits my radar. So I remember to go look at it. Do I want to renew it? Great. Just, I'm done. It's on autopilot. It's going to renew anyways. But if I need to cancel it because I don't use it anymore, then I have the time now to go ahead and get that taken care of. But vendor or profit leaks are also, they can be stuff like you have staff who are spending time on the wrong tasks. And it's one of those things where I see where an attorney is doing work that could be delegated to a paralegal. That's usually the big one that I see. You want to make sure that you have the right people doing the right work and that they have the right tools to get that work done. Something that I see on the vendor pricing, IT. Oh my gosh, for a long time, this was a lot. Like I felt like every client I talked to about this hit this thing where they had an IT, they outsourced their IT support, and the IT support was being billed based on unit, but unit meaning how many computers, how many printers, how many connected devices that they were responsible for, which is appropriate. I'm okay with that model of how they come up with their bill. But the problem can become, oh, that copier died and we didn't replace it because we had three and we didn't need another one. And but nobody went back to the IT person and said, "Hey, we took that one offline because it doesn't work anymore and you're still billing us." They don't always know because they're not in your office every day. So they don't see it. So I want to make sure that, from as we're talking about profit leaks, that we're actually periodically looking at what we're being billed. Are we reusing what we're paying for is what it comes down to. And then software tools, I've already talked about this, like the difference between Calendly and Acuity, both doing the same things. And maybe one has an extra feature that the other one doesn't have. Okay, but then why are we paying for both? And again, there may be an absolute valid reason why you need both. But if there's a chance we can get rid of one in favor of the other, let's do that. Okay. But of all the things that we talk about, the problem is that there's never an emergency with this stuff. So that's why they just stay. It's one of those things that it just happens that software renewed. Oh, I'll get it next month. I'll look at it next month. And then the next month comes, and before you know it, it's 6 months and you haven't done anything with the software or made a decision to stop it. Okay. But my whole point being that small little leaks, if you don't attend to them, can become a very large drain over time. So let's put this into context. And I'm not going to make you do math. I did the math for you. So my goal, the first time, what we're going to talk about today, the exercise that we talk about in a little bit, my goal is to be able to identify at least 10% of your revenue in leaks. Okay, what does that mean for you? Okay, so I have a little bit of a chart here. So if you're at $100,000 in revenue, 10% is $10,000 a year. If you're at 500,000 in revenue, that would be 50,000 a year. If you're at a million, that would be $100,000 a year. And at 5 million, that would be $500,000. Think about what you would do if you're at any of those points, anywhere in between, wherever you fall on that scale. What would you do with an extra 10% of your revenue every year? And again, we're trying to find 10% of revenue. It's money you already have in the bank. We're just trying to not let it leave the bank. Okay. Irresponsibly, I should say. But fixing a profit leak can put real money back into your bank account without a single new client. And that's my point. So these gains, how we're going to find this money, it's reviewing expenses you've already paid for. Okay. So we're not going to do new marketing for new clients, no extra hours of work. We're just going to manage better what we have control of. Okay. My whole message is we have choices that we make every day. And so I would just want to make sure that you're aware of some of those choices that are available to you, and we're going to make better decisions. So let's take a moment and talk about where profit is lost. Okay. I often say, whenever I talk to new clients, I will tell them, hey, I want you to break up with your P&L because I know, and I did this, I am so guilty. I will tell you like 99% of the stuff I talk about with my law firm clients, are hard lessons I learned. Like I've learned them firsthand just from running my own accounting firm. Okay. And I did as soon as I started my firm, I was all about the profit and loss statement. I needed to see it at the end of every month. Where was I? What was the numbers? Yeah. Like I needed those numbers. Right. But the problem is your P&L is a snapshot in time and it's not giving you the entire story. So why, if you're diligent and you do look at your bookkeeper at the end of the month, balances all your accounts, gives you a set of reports, and you're diligent about looking at your financial reports, how is it that waste still hides in plain sight? Okay? Because here's the thing. You look at your profit and loss statement and you know the totals. Everybody does this. Everybody has their report they look at and has the numbers that they look at. I've seen this over and over all the years that I've worked with law firm owners. We all have our numbers. I have mine. Okay. But here's the thing. You look at your P&L and you're like, oh, well, expenses in total went up 8%. And then you're thinking to yourself, well, I did pick up a couple new clients. So apparently that's just normal because I had increase in revenue. The problem is that could be a fair conclusion, but what you see on the profit and loss statement is summary information. You're missing the details behind each number. So I see where expenses hide or expense waste hides in three different places. Okay. And we've already talked about some of this. It's the subscriptions that auto renew. And it actually pains me to say that because most of my clients are on subscription pricing, but I try to remind them like, hey, this is renewing. Like make an active choice. We're going to continue to work together. But I'm also fair enough that if somebody comes to me and is like, we're done, then we're done. Like I'm not a vulture when it comes to this. I want you to make the best decision for you. Okay. So not all subscriptions are bad. I get from my standpoint, I know why I price with a subscription model because I hate doing billing. So, which I know I'm talking to lawyers. I know you know, and my bills are nothing like yours. But waste can easily hide in places with subscriptions that auto renew. Staff who are doing the wrong tasks or they're doing the right tasks, but they're overqualified, stuff that you can easily delegate to somebody else. And like I said, with the IT relationships, and I'm not trying to pick on IT. It's just the one thing that popped in my head. Because honestly, I could say same thing about Westlaw. That thing renews. You get the contract for Westlaw, and they just leave you whatever tier you're in, whatever bandwidth you are in for the users. They just renew it. Because if you don't actively renew it, if you don't actively look at it, insurance contracts, same thing. They'll just renew. If you don't tell them you need to increase your policy coverage or you need to review your deductible, okay? It's set it and forget it. That whole, and it happens, and I get it because I do it. But those are the things that we want to talk about today. And then this was something that I learned through the book Profit First, but I forgot because I remembered in psychology class in college. Parkinson's Law. So Parkinson's Law essentially says that whatever resource you have, your output is going to match whatever resources you have. Okay. And in the book Profit First, Mike talks about a tube of toothpaste. You've got a full tube. In the beginning, you're just squirting, doesn't matter. Some drips in the sink, not a big deal. But when you get to the end, you're like rolling the entire tube all the way just to get that last little bit out. Because whatever supply you had, you're going to use it. Now, I will tell you, I can put it in terms for you about time. Okay. Whether you have 3 weeks, 3 days, or 3 hours to get a motion drafted, it's going to get done, right? That is Parkinson's Law. Whatever your amount of time is available, the task at hand, you will get it done. So Parkinson's Law, that's why the formula that talks about in Profit First, instead of your P&L saying, income minus expenses equals profit, that's why when you flip that formula into income minus your profit, expenses, you're going to say, this is my budget. This is my budget for my expenses this year. and I've got to contain, I've got to spend. That's what I have, and that's what I want to do. I want to make sure you're still going to be living within the parameters you're setting for yourself and for your firm. So, three different types of categories of expenses. So, we've got fixed expenses, and these are the required. They're consistent, hard to change. Okay, examples are going to be office rent if you're not fully remote, salaries for staff, and I will argue salaries for you. And I say salaries for owners. I know I appreciate the fact that if you're a sole proprietor or a partnership or an LLC, you don't truly have a W-2 paycheck like you would if you work for somebody else. But as an owner of a law firm, you need to be fairly compensated for the work that you do for the firm. But insurance, insurance premiums, loan payments, those are all known numbers. You know them now through the term of whatever that item is. They're hard to change those numbers, but you still want to be able to review those annually and, if possible, negotiate terms. So if you're renting an office and you're using only half the office space, are you able to talk to the landlord? I mean, I know it depends on your office setup, but is there another unit within your building that you could move to that's smaller that could cut your rent? And that's just an example of things to look for. And then, so those are our fixed expenses. Then we have variable expenses, which something that fluctuates because something else is happening. It takes into account something else. So either if you have hourly staff that work part-time, maybe one week they work 10 hours, the next week they work 20. Okay, that's going to be something that's variable. These would be filing fees. And filing fees I listed here under variable, not in the sense that a filing fee with the court is always going to be the same, typically the same, but it's going to be more about the volume. If you took on 10 new clients last month, you may have more filing fees than you normally do. Or if you took on, versus maybe one month you have one case that needs a filing. Okay. So that's where, filing fees, it's not always the variable expenses. It's not always that the rate changes, but the number, the occurrence happens. It could increase or decrease over a month. If you have contractor costs, depending on, do you have a virtual assistant, or do you, if you're a PI practice, if you have a team that goes and does gets your medical records for you, that could fluctuate, okay, based on how much the workload is on at a particular week or a particular month. Or maybe you have case specific costs, and you know the difference. If you're in a firm where, because I appreciate that everybody in here practices a different area of law, but case specific costs, if you have if you're a litigator and you have a case that is approaching trial, you're going to start ramping up your case costs. Okay. But you can plan ahead for that. Even though that as a total is going to fluctuate for you, it's not always going to be the same amount every month, but you can plan ahead. The last part is discretionary expenses. These are the ones that you choose and they're not required. Okay. These are the tools you work with, your software. It's your marketing. Which, are you using a marketing agency, or do you have a marketing one person, not an agency? What types of ad spend? Okay. What trainings you go to. I mean, I love that 8 a.m. I love the 8 a.m., the relationship that I have that gives me the platform to be able to teach you today for free. But I know for my CPA license, I can't get all my I have training that's specific training is required at certain points every couple of years, and I can't get it all for free. So there's trainings I choose that I have to pay for. But what about memberships? Are you part of the local bar association or not? I mean, so those are all the discretionary expenses, the things that you choose. And unfortunately, this is where most of the waste that I see. And again, I'm not telling you not to pay for the training, not to go to the conference, not to join a membership. I just want you to be aware that you make a decision because you know that you're going to get some type of an investment out of that. You're going to gain something out of that. Okay. But this is where you have the most control too. So let's talk about compounding effect because this is where I'm saying one little thing, it doesn't necessarily feel like a problem, but here's the deal. A $50 a month subscription, you're like, it's 50 bucks. 50 bucks a month, not a big deal. It's what, 10 cups of coffee at Starbucks a month, which I'm like, not a big deal, right? But here's the problem. If you can find 10 $50 a month, that's $500 a month, and that's $6,000 a year. And I know my bigger firms that are listening, that are attending this webinar, you're like, 6 grand, not a big deal. My firm is in millions of revenue a year, so 6,000 is not a big deal. The problem is because you're a bigger firm, you don't have just 10, you have like 10 times that. Okay. So this does add up. It really does. But recurring costs just seem to grow invisibly over time because here's the problem. And I just did this. I just did this to myself. You make a decision, you're researching software and you can justify it. You're like, not a problem. I'm going to sign up for this. I know what I'm in for. I understand what I'm paying for. I'm going to use it. And then you're like 6 months down the road and then you didn't like the tool for whatever reason. And I just did this. I had some software that I bought, was so excited, spent time learning. I'm all like, yay, it's going to help me be more efficient. I'm so excited. And then I stopped using it because it started getting hard. It wasn't exactly what I thought it was. But then I forgot until I did my exercise and I was like, oh no, I need to cancel that because I'm not using it anymore. But it was the right decision at that time. It's that we make the decision and then we forget about it. That's the problem. But the small leaks carry a compounding cost, okay? And here I want to reframe this for you because it's $50 a month or whatever it turns out to be, whatever we're talking about that you find in your firm that could be a leak. If you don't fix this, you are essentially just working more to pay for the expenses. I would rather you work less and have more money in the bank. Okay, that's my takeaway for you guys today. Okay, so I've been talking about this framework. Let's just dive into this expense review framework. So it's a 3-step process to evaluate every dollar you're spending. So how are we going to do this? And I want to start by saying that while I talk through today, and I have this again as a download that you'll be able to get afterwards, I say you do this. I don't mean you literally. As an attorney, you have so much other things that you could be doing. Ask your bookkeeper to help you with this. If your bookkeeper won't help you, then ask a paralegal. Ask somebody in your office can help you with this. I don't mean for you personally to do this, okay? So somebody can help you with this. But here's what we're going to do. So step 1 is to gather your information. What I want to do, and I don't care what day you do this. So we're in June, what's today? June 18th. So if you do this with information as of today, I want you to go back 12 months. So go back to June 18th of 2025. Why 12 months? Because there are subscriptions you have that are annual. Okay. So as long as you pick a 12-month period, you should hit the last payment or the next one coming up. Okay. So 12 months, that's why 12 months is critical. I've had people negotiate with me and they're like, how about I just do 3 months? And I'm like, well, no, 12 months because I don't know how many annual subscription or annual payments that you have. I want to make sure we capture that. Okay. And even I have a gold star. I have a client who does this and they do 13 months just to make sure that they've captured all the, in case they paid something early. Okay. So, but go back 12 months. Now I wrote on here 12 months of bank statements and credit card statements because that's where all the information is. But what's even better is if you use QuickBooks or Xero or MyCase accounting or whatever your firm's books are in, all of this information should already be posted into your books and your bookkeeper can pull a report for you that will give you this detail. And here's what you need to do. It's not the profit and loss statement, but at least in QuickBooks, I know how I do this. I do actually pull up the profit and loss statement on QuickBooks, but I scroll down and I make sure it's for 12 months. I scroll all the way down towards the bottom, and there's a number right above net profit that says total expenses. When you click on that total, it expands and it gives you all the detail. Literally every transaction that happened that created that total expense number. That's what you want because it's going to show you a date, who you paid, why you paid them, and how much you paid them. Okay. So that's the idea. We want to be able to get a list that tells us the different things. Now, we're going to look for patterns. So I get if you don't use spreadsheets often, and that's quite okay. But again, if you have somebody like a bookkeeper who can help you with this, they're probably well versed in a spreadsheet and can sort and filter and change the view of things to make it a little easier. But it's okay if you don't use spreadsheets normally and you can print this out because what I want you to do is look for patterns because you won't see these. And I just did this week with somebody, with a client, and we realized that the bookkeeper was putting in marketing because I kept saying, your marketing spend's going up. And he kept saying, yeah, marketing spend's going up. He agreed with me. And I'm like, okay. But I feel like it's going up a lot. Like I do understand what you're saying and you are increasing your leads, so it's working, but I just feel like the ratio, the numbers, like to me, numbers have relationships. And I said, I'm not quite sure. So we looked at it and the person that does the bookkeeping was like putting in the payment to the marketing agency. I'm like, well, that's not really ad spend. You're paying somebody for their time. So that needs to go into, that's a labor cost. Okay. And there were some other things. I think there was like a training conference or something that had to do with marketing. And I'm like, no, that's training. That's not marketing. So, so when you look at a profit and loss statement, it's those things are so aggregated. There's a total. You're not seeing all the detail. That's why we need to get into the total, into the details, and look for the patterns that you don't normally see. Now, my questions when I was doing it this week were more about I was focusing on the marketing stuff. It's not going to change the total, but I at least needed to make sure that we're looking at numbers that make sense. Okay. So step one is just to make sure you have a detailed list of every transaction, regardless of how you paid for it, whether it was a check or with a credit card, but you have all that information of what you paid, who you paid, why you paid them, and when and how much. Okay. So once you go through, you have this detail, you're looking for patterns of things that don't look right, but evaluate your level of necessity. And what do I mean by this? Okay. Is this essential to operations or is it optional? And then second, you're going to ask, am I getting value equal to or more than what I'm paying? Okay. I have, I use ClickUp as my task management system. Now, I purposely use that even though my CRM actually has the ability for tasks because I don't like how it functions. It actually is less efficient for me to use my CRM for tasks. But on the flip side, for me, ClickUp, I cannot use it as a CRM. So it pains me to pay for two separate tools, but I am so much more efficient because I pay for the two separate tools. So just the two questions you want to ask, is this essential to operations? And am I getting value out of this? Okay. And you're going to rate each expense using a scale. So it's essential, meaning the business cannot operate without it. Or is it important? It has clear value and removal would impact daily operations. Or is it useful, meaning it's nice to have, but it's not critical? Or questionable. It's unclear. You have no idea what return on investment. So you pay $50 a month for this. You have no idea if it saves you $50 or not. Okay. Or you don't even use it anymore. You're not even sure what it does. Okay. If it's questionable. Oh, so once we do those four, we rate those four, every single vendor is going to be one of these ratings. Anything that you rate as useful or questionable can go on your review list. Now, this is where I like if you start this whole thing with a bookkeeper, go to your bookkeeper and say, hey, pull this list, and then ask them to go through and do this initial assessment and then give it to you from here because you're going to have a different viewpoint than somebody else in the firm about whether it's critical for operations or whether you're getting value out of it. Okay. But anything that you mark as useful or questionable, now we're going to make a short list. Okay. Because those are the things that I want to focus on. So we have our short list of the questionable and not sure or unsure. And now we're going to assign an action to every one of those. Okay. So this is like one last pass. We're going through this stuff. So at this point, we get one of four labels. And now this is a new label. Okay. Now we're like subset of a subset, right? But for the items on your short list, are you going to keep it? Because the more you think about it, it really is essential and it's delivering value. If that's the case, leave it alone. Just cross it off and you're done. Think about whether you could optimize it, meaning you keep it, but you're either going to go back to the vendor and renegotiate terms or downgrade, or do you consolidate with another tool? Okay. Downgrade would be subscriptions, almost all of them have 3 tiers, right? At least. Although now that I say that, I can think of a couple that have 2 and some that have 5. 3 seems to be a magic number, right? If maybe you have the right tool, but you look up the current list, you know how you can go to the website for whatever that tool is and it shows you the pricing and then the features of each tier or level or whatever they call it. So say you're on the top tier, are you using all the things? Because you know how normally most websites will say basic tier is XYZ features. And then the mid tier will say everything in the lower tier plus, and then they highlight the extra things in that tier. And then the top tier is like everything in the mid tier plus this, and this. Okay. Focus on the this, and this, the plus things. Okay. So if you're on the top tier of a subscription, are you actually using the featured things? Because I will tell you 9 times out of 10, when you signed up for the trial, they by default put you in the top tier. And then you're like, oh, this is great. This is exactly what I need. And then you don't think about, oh, I could just downgrade to the mid tier because that mid package actually covers all the things that I use. I don't need to pay for the extra stuff. So that's what Optimize is. Optimize is we're still keeping this tool, but instead of being on the top tier, we're going to downgrade to the mid tier. Or instead of being on the mid tier, we're going to downgrade to the basic because that's how we use it. Okay. It's not a slight against the software. It's just that's what we use it. That's just how we use. And so that's all we need to pay for. Okay. Or do we reduce? Okay. That could be one of our next options, meaning we scale back the usage. This is my contemplation right now. For the longest time, I resisted Claude. And then I jumped in last weekend because I had 2 different friends, actually probably 3, that were like, do it, do it, do it. You've got to get back on Claude. And so I'm like, okay, I'll do the $20, 20 a month. And what am I doing? I'm burning through my credits. So now I'm sitting here like all weekend. I'm like, oh, it would be so nice if I jumped up and paid the $200 a month. But I'm resisting in my head. Should I pay the extra? Is it worth it? Okay. But for the reduce, could I just scale back my usage and then I'm fine? Or because sometimes the tiers, it's not the features that take you from low, mid to high package. Sometimes it's your usage. Is your usage appropriate? Okay. Or can you scale back the usage? Or right now I'm evaluating, I will just share, I use Ring Central for my business phone and I am on Google Workshop or Google Workspace for my email. So I have Google Meet, but I'm in the process right now of reviewing, do I switch my phones over to Zoom? And then I would have on one platform, I would have Zoom and phones and texting. I would eliminate the in my question in my head, and this is why I have to research it, is that I think it only eliminates Ring Central for me because I still would keep Google Workspace because it's my email. So I'm I'd make a change, but I need to make sure, is the service going to be the same or better? Reliability, I can still text on it, all those things. But I'm going back and through and trying to figure out, do I reduce or do I optimize? So that's kind of I'm in that, and I've been thinking about this for weeks, and I just need to stop and just make a decision and move forward. But or can you get to a point where you eliminate something? You can just cancel it and the firm's not going to notice. And I will tell you, probably the common thing that I've heard about lately has been somebody comes in and says, "Oh, we need Adobe Acrobat, not the reader. We need the full functioning program. We need to do Bates numbering. We need to redact things. Everybody needs it." And so every single workstation in the firm gets it. And I don't know about you, but if you're a partner or law firm owner, are you really redacting things? You probably have a paralegal who's doing that for you. So do you really need every single workstation to have Adobe Acrobat on every station? You may be able to scale that back and only get one or two subscriptions because maybe that's all you need. Okay. But do you eliminate? And again, that would probably fall more into the reduced or optimize, but it's thinking through, do you even need this? Okay. If not, can we eliminate it? But here's what I want to do. So on our short list, we have identified potential waste, and we're gonna go through and we're going to now set a deadline and who is going to take action for this. And you know what, Peyton, I'm so sorry, but I just realized I've been talking. I'm so excited about this. I forgot to do our polling questions. So we're gonna get through our polling questions, I promise. And that might have actually been something going on in the chat, but I like covered up the chat so I didn't see all the things. So if we can do a polling question. And while Peyton's pulling that up, just to wrap up this slide, so we've identified an action plan for each of our shortlist items. We're going to set a deadline, and who in the firm, not you, or you're not doing all of them, but who in the firm is going to follow through to figure out what's going to happen. And then I want you to keep track of what you've saved, because that's where the 10%, my goal is to save 10% of your revenue by doing this exercise. And the first time you do this will be the most impactful. So here's the polling question. So when was the last time you reviewed your firm's expenses line by line? In the last 3 months, in the last 6 months, over a year ago, or never? Because this is going to be my first time. So those are your questions. And actually, now that I think about it, I think I need to move my window because I think that was an issue last time. So um, okay, what I'm going to close that out. What is our responses? Okay. So, oh, I love this. 44% in the last 3 months. That's awesome. You guys get gold stars today. In the last 6 months, we'll give you silver stars because that's awesome that you're doing it. But I would encourage you to do it every 3 months. Over a year ago and never. Oh, we've learned a new thing. We're going to put a new thing, and this is not time consuming. This is something that in a half hour you can knock this out. Okay, so this will be good. So I love that. Um, so, but I want to make sure, that you're going to write down your actual savings so you can add up how much are you going to save in 1 year by the actions that you're taking. So in addition to this, you can always go back and watch this recording again, but I actually have a video on my website that it's called Over the Shoulder. You can watch me do this. And so you can either scan the QR code, or if you go to this link, so it's on my main website, and then it's maximizing profits by minimizing expenses. And there is a charge if you pay for it, but because you're doing this training, use this code 10%. So the number 10%, use that code and it'll be free. And you can watch me and you can see exactly how I go through and do this. So high impact waste areas. So we're going to go quick the next couple of things. Oh, and actually, because I know we need to get our polling questions in, could we do the second polling question, please? So before today, what percentage of your expenses did you think you could cut? So you run a pretty tight ship, so 0 to 2%, 3 to 5%, 5 to 10, or more than 10%. I know that there's waste in there. I don't do anything with these. I just know that you guys need the polling questions. That's the only reason we do these. I will tell you, I have done this and I've had results from, I do this with my clients. And I mean, I had one client that we actually found a little over 30% that we could save in her firm. And now it was unfortunate why, because she had somebody stealing from her. So that was very sad of why. At first I was so excited. I'm like, did we really just find 30%? Because it was a lot of money. It was almost 90 grand. And I was so excited. And then and as the excitement started to kind of pull away, I was like, uh-oh, wait a minute. This is not reasonable or logical why this number is so big. And then the more I dug into it, I had that pit in my stomach. And I'm like, okay, something's wrong. And so we end up finding that somebody on her team was stealing from her. So, but we wouldn't have known because we sat and did this. Okay. And I'm not saying that this guarantees you'll find fraud, but just trying to show you that this exercise does pay off. So, oh my gosh, so 41% run a pretty tight ship. I love that. That's awesome. Three or 28% are in the 3 to 5%. That's still meaningful. It really is money. Okay. 22%, 5 to 10%, and 9% know that there's waste in there. So let's hopefully you walk away from this and we're gonna, get some money, put more money in your bank account. So here's the things that we'll just go through these pretty quick. So I want you to focus when you're polling, you pull your list and look to see who you're paying. Look for duplicate tools and unused license. Those are the two things that really those add up very quickly. Okay. So I have game plans in here of what you can do if you run into these situations. Staff. I will not have time to go through, but which is why I linked this is a free resource on my website, but scan this QR code or go to this. I call it a free up your workday calculator. And essentially, it walks you through a process of where you have everybody in your firm, you do it, and everybody in your firm does it. You track for 7 days all the things you did for the firm. And you start to go through, and there's a process that I walk you through. When you download this, it'll talk about this, how you identify are the right people doing the right things. And the best thing is that if you're going from solo to hiring your first person, this is actually invaluable to do this exercise because if you go through this exercise at the end of a week, it actually helps you put together your job description because you'll write down all the things that you do that can easily be delegated to somebody else. So this is just something staffing, making sure that you have the right people doing the right things. Office vendors. So overhead that you're overpaying. Office space is usually the top three expenses. It's your payroll and your office space are like the most expensive things, right? So just make sure that you're staying on top of contracts, vendor relationships, put in your calendar or your task, however you calendar tasks, whether that's your actual calendar or if it's a task management system, but make sure that you put reminders for yourself out 30, 45 days before a contract ends. So when you sign the contract, whether you're actually signing it or electronically signing it, get yourself in the habit of, oh, I need to put this either on my to-do list with a future date or on my calendar 30 to 45 days before this ends so that I can review and make sure that I'm not continuing it if it no longer serves me. Another thing are fees, interest, and slow collections. So I haven't talked about this yet today, but bank fees and credit card interest can be silent profit drains because if you're carrying a balance on a credit card, they just automatically they add the interest to the balance, right? And then now next month you're paying interest on the interest that you paid last month. So, but also check for, account maintenance fees because oftentimes you can negotiate some of that with your bank. Banks will not proactive, most banks, I should say, most banks are not proactive to say, oh, we have a new product that you qualify for, and it would actually save you money. So make sure that you're talking to your banker. Slow collections. I mean, how many times do you issue an invoice to a client and then they pay you 45 days later? Well, that costs you money because now you've got to follow up and it's going to create more time and work on your staff to follow up on that. I do have a collection. I call it an escalation schedule. If you go to my book, it's called Plugging the Leaks, which you can get for free on my website. Chapter 4, I actually have a whole little timeline that kind of helps to make collection more timely. Okay. And then any uncollected revenue is one of the most expensive costs that your firm carries because an uncollected revenue, meaning your accounts receivable, your unpaid invoices, however you call that, and why that's the most expensive cost to your firm is you did the work and then you're not getting paid. And I know eventually you get paid, but the longer it takes a client to pay, the less they usually will pay. And you know what I mean? The write downs, the discounts, because you're like, oh, I just don't even want to deal with that client complaining. So I'll just write that down. Don't do that. You deserve to be paid. You deserve to be paid fairly. And the rate that they're paying you is not just the rate that you worked that hour, it's all of your education and all of your work experience that went into making you eligible and available to work that 1 hour for that client. So make sure that you get paid. So let's just make sure that our savings are showing up so that you're keeping what we've saved, right? Here's the couple reasons why savings don't always become profit. And this is the most common one. I've done it. You cancel a $200 a month subscription, and then next week you're like, oh, here's a new tool. It's $180. So while you had the win of saving $200 a month, you turned around and just spent 180 of it. So the savings just got absorbed by Parkinson's law because you had available money. Okay. So just making sure that the money you save, we're going to make sure that we keep it and put it to good use. And I'm okay if you turn around and take a $200 savings and pay the $180 tool if you're actually going to use the new tool. Okay. So don't take the lesson that you have to sock away the money, but as long as you're going to use it, I'm good. I mentioned Profit First before. I used to be a certified Profit First professional. I'm not anymore, and it's just I left the group. I just didn't have time to be active in it anymore, but I fully support. There's a book called Profit First. If you are interested, buy the book. It's amazing. It really did change how I think about things. And it's all about savings to be like you're identifying, you have a dollar that comes into the firm. How are you going to spend it or save it? Okay. But once we go through we go through this one time, I really encourage you doing this every quarter. Okay. Because the first time's the most impactful, but if you keep doing it every quarter, it doesn't get out of control. And so I know we're right up at 2 o'clock. I don't know where all of a sudden the time like flew by. But if we have questions, I am happy to answer questions. I'm actually going to end the slideshow.
Yes, and Kelly, we have time for a couple questions. So the first one that came in is someone said, for a small firm that operates very lean to begin with, what are some common areas in which you see waste that could be trimmed?
So on the smaller firms, it's definitely attack the subscriptions. Just be very honest with yourself. Do you need the tools? Like what you're paying for, are you actually using them? And there's times where the answers might be yes. And you're like, yep, I have the right tools. I'm using them. And that's fine. There may not be. So then the follow-up question would be, okay, you have the right tools, but is there an alternative competitive tool that is cheaper? That would be my only thing after that. You will gain traction. So even if you're a smaller firm, the longer you work, you will gain traction. You'll start to grow, and then you'll be so overwhelmed that you're like, what was I doing? Doing it all myself. I gotta hire people, but that's a whole other question. But definitely make sure the subscriptions are the tools that you are using.
Awesome. And then time for one more, and that is someone is saying they still use PC Law, but believe it might be time to look for something a bit more modern. Is there any accounting software for a law firm that you would recommend?
Unfortunately, the one that I just end up going to is QuickBooks. Um, The real only possible solutions that you could have in my mind are QuickBooks, MyCase accounting, or Clio accounting. But MyCase accounting, you have to be on MyCase. There's no point in using it if you're not on MyCase as your case management. And then the same thing with Clio. There's no point in using Clio accounting without using Clio as your CRM or your case management system, which then ends up pushing you into QuickBooks. QuickBooks, I have a love-hate relationship with Intuit. I've been very public about it. I don't love Intuit. I don't love the cost. I don't love their AI really stinks. It creates more work for my team to get books closed every month. But on the flip side, it's the most efficient to use. It's widely known by so many people. So when you go to hire a bookkeeper, you will have a very huge pool of people that you could hire to help you with your bookkeeping. So you have to kind of weigh the pros and cons. I will tell you, if you go to something like PC Law, you might have already found this, that it's going to be a hard time finding a bookkeeper who will support you on that. So, but unfortunately, I would regretfully say QuickBooks would be the one catch-all kind of solution for that. And it's not built for law firms. It's very generic, and that's good and bad. Okay. What happens is you have your case management system that's going to have a lot of your detail about where revenue is coming in from, that doesn't get posted or captured into QuickBooks, and that's okay. So QuickBooks would be a good alternative. QuickBooks Online, I should say. Desktop is going away.